In a surprising turn of events, Solana and Chainlink have emerged as the frontrunners in the latest cryptocurrency surge, each experiencing impressive gains exceeding 12%. This rally was sparked by the release of July's Consumer Price Index, CPI, which revealed inflation rates lower than anticipated, thereby strengthening expectations for a potential interest rate cut by the Federal Reserve in September. Specifically, Solana saw a remarkable increase of 12.9%, bringing its price to $198.48, while Chainlink followed closely with a 12.5% rise, reaching $24.21 within a 24-hour period, as reported by CoinGecko. The positive momentum was not limited to these two. The broader altcoin market also experienced significant growth, with Ethereum climbing 8.6% to $4,670. Cardano increasing by 8.9% to 85 cents, Dogecoin gaining 6.2% to 23 cents, Sui rising 5.9% to 3.91 cents, and XRP advancing 3.0% to 3.25 cents. This surge in cryptocurrency values coincided with the CPI report, which indicated an annual inflation rate of 2.7%, slightly below the economists' consensus of 2.8%. In response, the market adjusted its expectations, now pricing in an 82.5% likelihood of a rate cut in September, a slight decrease from the 86% probability noted the previous day. Min Jung, a senior analyst at the quantitative trading firm Presto, emphasized that the current market dynamics are markedly different from those seen in previous cryptocurrency cycles. He noted that this rally is primarily fueled by institutional investment rather than retail speculation, highlighting a significant shift in market behavior. The recent upswing was largely influenced by the CPI release, which rekindled optimism regarding a potential rate cut in September, a sentiment that aligns with the latest projections from FedWatch, Jung explained. He further elaborated that while the macroeconomic environment is supportive, the real driving force behind this momentum is the strong conviction among institutional investors. Jung pointed out that this trend marks a departure from earlier bull markets, which typically witnessed capital flowing from Bitcoin and Ethereum into altcoins, largely driven by retail traders. It will be interesting to see if this pattern holds true this time, considering that the current rally is being propelled by institutional investments, he remarked. Analysts from Bitfinex have also noted a significant increase in open interest for major tokens, which has surged from $26 billion to $44 billion over the past month, indicating a revival of speculative trading activity. However, they issued a cautionary note regarding the rising levels of leverage in the market. They warned that increased leverage can lead to greater systemic fragility as capital becomes more dispersed across volatile assets, potentially heightening the risk of widespread liquidation events. In such a volatile environment, markets are more susceptible to liquidation cascades, sudden reversals, and exaggerated price fluctuations. The analysts pointed out that leveraged trading conditions tend to be reflexive, where price movements can amplify market sentiment and vice versa. They cautioned that any stall in momentum or unexpected news could trigger a rapid unwinding of leveraged positions, resulting in deeper losses across altcoins. As we navigate this evolving landscape, it raises important questions. Are we witnessing a fundamental shift in how cryptocurrencies are traded? Or will retail speculation return to dominate the market? What are your thoughts on the role of institutional investment in this current rally? Share your opinions in the comments.